That specific, like, sinking feeling when you pull a thick envelope out of the mailbox.
Oh, yeah, especially when the return address belongs to your county tax assessor.
Exactly. Even before you tear it open, there's just this knot in your stomach because you know the number inside is going to be higher than last year.
Oh, absolutely.
And, there is absolutely nothing you can do about it.
Right. It's one of the most universally frustrating experiences, I think. I mean, you are basically holding a bill for something you already own.
Yeah, and that shared visceral frustration is really the engine behind the source material we're diving into today. So, welcome to today's deep dive.
Glad to be here.
We are looking at this very impassioned address from a speaker who basically takes that everyday anxiety about property taxes and spins it into a massive systemic indictment of our entire financial structure.
Yeah, it's really something.
But the thing is, they don't just stop at pointing out the problems. They actually use those grievances to propose a sweeping global escape route.
Which is what makes this a truly fascinating piece of rhetoric. I mean, the speaker opens with a highly specific question directed at their audience, which is, why are you still following Mr. Mufareh?
Right.
And every single thing that follows in the audio, the outrage over school funding, the constitutional theories, the claims of global corruption, it's all meticulously constructed to answer that one specific question.
Well, before we get into the actual mechanics of how the speaker gets from, your local tax bill to this Mr. Mufareh, we really need to draw a clear line in the sand for you listening.
Definitely.
The audio we are analyzing today makes some incredibly bold legal and financial claims. So just to be unequivocally clear up front, we aren't adopting the speaker's legal theories, we aren't endorsing their constitutional interpretations, and we certainly aren't vouching for the alternative financial business they ultimately pitch.
Right, that's not what we're here to do.
Exactly. Our job is strictly to take this argument apart, look at the gears turning inside it, and just help you understand why this specific pitch is so persuasive to the people who are listening to it.
And, to understand that persuasion, we really have to start where the speaker starts, which is on the ground level.
Right, the everyday stuff.
Exactly.
Yeah.
The speaker needs to convince the audience that the financial ground they are standing on is structurally unsound. And the primary target they use to prove this is the local school district.
Okay, yeah.
Specifically, they look at how school districts fund themselves through bonds and property taxes, which the speaker describes as a circular firing squad.
A circular firing squad. So let's actually define what we're talking about here, because the term bond gets thrown around a lot.
It does.
Like when a local school district decides they need to build a new gymnasium or upgrade their HVAC systems, they don't just have $10 million sitting in a checking account.
No, of course not.
They have to borrow it. So they issue municipal bonds. They are essentially asking investors for a giant lump sum of cash up front in exchange for an IOU that promises to pay that money back over time with interest.
Yeah, and that is just the standard mechanism of municipal finance. But the speaker in our source material makes a very specific, honestly very explosive allegation about how these school bonds actually function in practice.
Okay, what do they claim?
They claim that school districts are trapped in a cycle where they issue these bonds every year or two, but they only ever pay the interest. The speaker alleges that the districts never, ever pay down the principal debt.
Oh, wow. So it's like a household living entirely on credit cards.
That's a perfect analogy, yeah.
Like you put all your groceries, your gas, your home repairs on the card, but every month you only make the minimum interest payment. You never actually touch the principal balance. So the interest keeps compounding, the minimum payment keeps getting bigger, and to cover that growing minimum payment, you essentially have to force your boss to give you a raise every single year just to tread water.
Right. And in the speaker's analogy, the boss being forced to give the raise is the local homeowner, because the district relies on property taxes to service this supposedly endless mounting debt.
Okay, but I have to push back on the fundamental premise here, though. I mean, if you're listening to this and thinking, wait, if my town never paid back its debts, wouldn't it just go bankrupt?
You'd think so, right?
Yeah, you are entirely justified in asking that. If a municipality truly never paid the principal on its bonds, wouldn't the municipal bond market just completely collapse? Investors aren't in the business of handing over millions of dollars and saying, hey, just keep the principal forever as long as you toss me a little interest.
Right. No, that is the glaring structural flaw in the absolute nature of the speaker's claim.
Yeah.
Because in reality, municipal bonds have strict maturity dates and repayment schedules. Cities and school districts frequently use what are called serial bonds, where a portion of the principal is paid off every single year alongside the interest. Or, they establish sinking funds specifically dedicated to paying back that principal.
So they do pay it back.
Yes. If a district just stopped paying principal, they would default. Their credit rating would tank to junk status, and they would be locked out of the financial markets entirely.
So basically, the speaker's core mechanical claim that the principal is never paid is factually incorrect.
Systemically, yes. But, and this is crucial, we have to look at why this claim still feels incredibly true to the person paying the tax bill.
Oh, interesting. Why is that?
Because while the district is paying off individual bonds, they are simultaneously issuing new ones for the next project. The new roof, the new buses, the new athletic field.
Oh, I see.
So to the taxpayer, the overall debt load never actually seems to shrink. A specific bond might retire, but the aggregate debt and the tax burden required to service it only ever seem to go in one direction, which is up. And the speaker is totally weaponizing that feeling of endless financial burden.
Right. And the source material gets very specific about how the government extracts that rising cost, too. The speaker says there are two levers the local government pulls to basically squeeze more money out of you.
Yep.
First, they artificially inflate the appraisal value of your house. Suddenly, the home you bought for $200,000 is assessed at $400,000, and your tax bill doubles even though your actual income hasn't changed at all.
Exactly. And the second lever is the levy rate itself.
Okay, remind me how that works.
For anyone unfamiliar, the levy rate is simply the percentage multiplier applied to your home's assessed value to calculate your actual tax bill. The speaker argues that if the government can't get away with inflating your home's value one year, they will just quietly turn the dial up on the levy rate to ensure they extract the necessary revenue.
It's like a vice grip.
It really is.
And the source anchors this entire mechanical explanation in a deeply emotional reality for people. They cite examples of people paying $8,000, $10,000, $12,000, even $14,000 a year in property taxes alone. They actually call it a second mortgage.
That phrase, second mortgage, is just devastatingly effective.
Oh, totally.
Because when you take out a mortgage, there is a finish line. You have a 30-year schedule, you make your final payment, and the bank releases the land. You own it.
You're done.
Exactly.
Right.
But property taxes have no finish line. The speaker explicitly taps in to the primal fear of losing your shelter. They argue that under this current system, you can work your entire life, play by all the rules, pay off your mortgage entirely.
And they can still take it.
Right. The government can still take your castle, quote unquote, if you stumble on the ever-increasing property taxes.
Well, the word castle is doing so much heavy lifting in the source material. Your home is supposed to be your ultimate sanctuary, right? You pull up the drawbridge, you are safe. But by framing municipal bond interest and levy rates as a direct siege on the walls of your castle, the speaker transforms this, annoying bureaucratic reality into an existential threat.
And once you have convinced your audience that the local government is laying siege to their castle, you can't just complain about poor civic management anymore. You have to escalate the grievance.
Right.
You have to prove that the siege is illegal.
Which brings us to, honestly, the most fascinating pivot in the entire address. The speaker takes this localized pain of high property taxes and elevates it to a full-blown constitutional crisis.
Yes.
They argue that the entire property tax system is not just unfair, it is a fraudulent violation of the 16th Amendment of the United States Constitution.
We really should break down the legal mechanics of this argument because it relies on blending two very different concepts of taxation.
Yes.
So the 16th Amendment, ratified in 1913, is what gives the federal government the power to lay and collect taxes on incomes from whatever source derived. It's the foundation of the federal income tax.
Right, but property taxes are assessed at the local and state level, not the federal level, and they are traditionally considered ad valorem taxes, basically taxes based on the value of a transaction or property, not income taxes.
Exactly. And that is where the speaker's creative legal blending comes in. The speaker introduces the concept of unrealized gains.
Okay.
Let's say you bought your house 10 years ago, and since then, the real estate market has exploded. Your house is now worth twice what you paid for it.
Which sounds great on paper.
Right. That increase in value is a gain. But because you haven't actually sold the house, you haven't received any of that cash. The gain is unrealized. It only exists on paper. You cannot go to the grocery store and buy milk with the increased assessed value of your home.
You are house rich, but cash poor.
Precisely.
Yeah.
So the speaker argues that when the local government raises your property tax based on that new, higher appraisal, they are effectively taxing your unrealized gains.
Wow.
And because the speaker defines those unrealized gains as a form of unreceived income, they conclude that the local property tax is actually an illegal income tax that violates the 16th Amendment.
I mean, it is an incredibly potent argument because it validates the exact frustration the homeowner feels. The homeowner is sitting there thinking, I didn't make any more money this year. Why am I being taxed like I did? And the speaker provides this grand constitutional vocabulary for that outrage.
Yes, and to make this grand constitutional theory feel urgent and real, the speaker anchors it to a current event. They point their audience to an ongoing case in the Texas Supreme Court that is supposedly litigating this exact issue, whether taxing property based on fluctuating appraisals constitutes an illegal tax on unrealized gains.
But the way the speaker frames this court case is brilliant from a persuasive standpoint. They do not say, let's watch this case and see how the legal scholars interpret the 16th Amendment.
No, not at all.
They frame the pending decision as an absolute litmus test for institutional corruption. The speaker says, and this is a quote, "We're going to see if the judiciary is honest or they're not."
It creates an impenetrable closed loop of logic. It is really the ultimate rhetorical trap.
It really is. Because if the Texas Supreme Court rules in favor of the speaker's theory, then the speaker is validated as a legal visionary who, saw through the matrix.
Yep.
But if the court rules against the theory, which, given the historical precedent of property tax law, is highly likely, it doesn't mean the speaker's legal theory was flawed. It means the judiciary is dishonest.
Exactly.
It proves the courts are in on the fraud. The speaker wins either way.
And this leads to a moment in the audio that really highlights the power of absolute certainty. After laying out this elaborate theory about unrealized gains and the 16th Amendment, the speaker doesn't invite debate. They just punctuate the entire argument with, boom, there it is.
Boom, there it is. It is literally a mic drop. It projects this total unwavering confidence that they have just exposed the wizard behind the curtain.
Yeah. But let's look at the psychological utility of this. Why is it so crucial for the speaker to frame a financial burden, something as mundane as a high tax bill, as a profound black and white unconstitutional fraud?
Well, because labeling the system as a fundamental illegal fraud provides a massive psychological release for the listener.
How so?
It completely absolves the individual of any financial shame. If you are struggling to pay your mortgage, or if you're drowning in credit card debt just to keep up with your tax bills, society often conditions you to feel like a failure. It makes you think you made bad career choices or, you didn't budget properly.
It internalizes the blame.
Exactly. But if the speaker can convince you that the entire system is an unconstitutional racket designed specifically to steal your wealth and threaten your castle suddenly, your financial struggle isn't your fault anymore.
You aren't a failure.
You are a victim of a colossal coordinated crime. It lifts the shame of financial struggle right off your shoulders and redirects all that internalized anxiety outward into righteous anger. And it does something else, too. If you just believe the tax code is poorly written, you might vote for a new city council member or lobby for reform. But if you believe the entire system, the local government, the tax assessors, the state Supreme Courts, are all operating an irredeemable illegal fraud, you realize you can't reform it.
Right.
You cannot vote your way out of a cartel. You have to escape it.
Which perfectly clears the stage for the massive pivot in the source material. The speaker has spent all this time convincing the audience that the house they live in is hopelessly on fire and the fire department is the one pouring gasoline on the flames.
Well, yeah.
The audience is desperate. They're looking for the exit. And that is exactly when the speaker answers their very first question. Why are you still following Mr. Mufareh?
Enter Mr. Mufareh, the ultimate escape hatch. The speaker completely shifts gears from constitutional grievances to pitching an upcoming business venture led by this figure. And the promises attached to this venture are not small.
Not at all.
The speaker starts asking these escalating what-if questions that, they sound like they belong in a late-night infomercial, but they carry the weight of everything we just discussed.
Yeah, the questions are designed to counter every single anxiety they just provoked. What if there's a business where you can develop an income? What if you can develop real wealth? What if you can live the lifestyle you actually want?
Yeah.
And the ultimate promise, what if this business allows you to completely get out of a fraudulent system and achieve total financial independence for your family.
It is positioned as the absolute panacea. It solves the granular problem of the $12,000 property tax bill, and it solves the existential problem of living under a corrupt, unconstitutional regime, all with one single business venture.
But what is incredibly revealing is how the speaker scales this solution.
Oh, right.
The grievance started very locally, right? School districts and Texas courts. But when pitching Mr. Mufareh's venture, the speaker suddenly pans out to a global view. They claim they see this ingenious corruption happening everywhere, across the Asian belt, throughout Africa, all over Europe.
Right. Why make that leap, though? Why stretch a complaint about Texas property appraisals all the way to the Asian belt?
To eliminate conventional geographic escape routes.
Oh, that makes sense.
If the corruption is only in your town, you could just move to the next county. If it's only in your state, you can move to Florida or Nevada. By insisting that this fraudulent system is a global, inescapable web, the speaker traps the listener. You can't run from it.
Right, there's nowhere to hide.
Therefore, Mr. Mufareh's project isn't just an alternative investment. It is presented as the only clean, ethical counter-movement left on the entire planet.
But here is where the mechanics of the pitch get truly fascinating. For all this grand buildup, the actual details of Mr. Mufareh's business are practically non-existent in the audio.
Basically zero.
Yeah, the speaker mentions that this is based on an original vision from 8 years ago. And when do we get to see the actual product? The speaker claims Mr. Mufareh will release the specifics very quickly in 2026, year of our Lord.
It is a phenomenal example of selling anticipation rather than a tangible product. The speaker is essentially saying, the world is ending, the global fraud is closing in, but the perfect life raft is coming in 2 years. Stay tuned.
If you've ever found yourself obsessively checking for updates on a delayed video game release or a highly anticipated tech gadget, you know the psychology at play here. But why is selling the anticipation of a solution often more powerful than selling an actual existing solution?
Well, because a real existing business is inherently flawed.
How do you mean?
If Mr. Mufareh launched his company today, it would have overhead costs. It would have market competition, supply chain issues, and complex terms of service. It would be bound by the messy realities of the physical world. But a hypothetical solution, a business that only exists in the form of what if questions, and a promised launch date years in the future, the business is flawless.
Is the blank canvas of hope.
Exactly the appeal. The listener can project every single one of their specific financial anxieties and desires onto that blank canvas. If you need a way to pay off your mortgage, the 2026 release will do that. If you want to leave a legacy for your kids, the 2026 release will do that. As long as the venture remains a promise on the horizon, it can be perfect.
And the speaker feeds that anticipation constantly. They pepper the address with phrases like, I'll update you, or we are waiting for Mr. Mufareh to give us permission to do public videos, or simply stay engaged. They are building an entire community ecosystem entirely based on waiting for a grand reveal.
Which brings the entire architecture of the address full circle. The intense anger the speaker drums up about school bonds, levy rates, and unrealized gains isn't just aimless venting. That anger is the necessary fuel to keep the audience engaged and waiting.
Oh, I see.
If the audience ever stops believing that the current system is a catastrophic illegal fraud, they might lose their patience and stop waiting for the 2026 rescue ship.
Wow. So the fear of the present is basically the glue that binds them to the promise of the future. Looking back at the journey this source material just took us on, it is a masterclass in a very specific, very aggressive type of persuasive rhetoric.
It really is. We started deep in the mechanical weeds, examining claims about how municipal bonds function, or supposedly fail to function, trapping homeowners in an endless cycle of rising property taxes and shifting levy rates.
And then from there, the speaker engineered a massive escalation, right? Transforming those local tax complaints into a sweeping constitutional crisis. They weaponized the 16th Amendment and the concept of unrealized gains to brand the entire system as an undeniable illegal fraud. Boom, there it is.
And finally, having systematically burned the current financial reality to the ground in the minds of the audience, the speaker offered the only logical sanctuary, Mr. Mufareh's 2026 financial venture, a global ethical escape route from an inescapable global corruption.
It moves from a granular local grievance to a global savior narrative in a matter of minutes. And as we wrap up our analysis of this material, it leaves us with an incredibly important dynamic to be aware of, especially as we navigate our own inevitable financial stresses.
Yeah, absolutely. Because when we feel financially squeezed by everyday realities, whether it is a shocking property tax appraisal, the creeping cost of inflation, or just the daunting math of trying to save for the future, we are at our most vulnerable.
Definitely.
We become incredibly susceptible to narratives that offer us a clean, absolute exit from that pressure.
And what this source material so vividly demonstrates is how the most effective pitches for sweeping new systems rarely start by explaining the system itself. They don't lead with their business model.
No, not at all.
They lead by deeply validating your worst anxieties about the world you are already living in. They map out the walls, and then they convince you those walls are rapidly closing in.
Because the underlying psychology of the pitch is profoundly simple. If you can convince someone that the world they live in is a burning building, you don't actually have to sell them the fire escape. They will beg you for the privilege of buying it.
Wow. So the critical question we have to ask ourselves whenever we hear someone diagnosing the catastrophic failures of the world around us with absolute certainty is this. If the world is a burning building, who is holding the matches and who gets to sell you the fire escape?